Hi, it's Sunday, March 27th, 2016. I'm going to talk today about one of the new market wizards. He was mentioned in this book by Jack Schwager, The New Market Wizards. It's a fairly old book. I think I bought it back in the 90s. And one of the new market wizards is Stanley or Stan Druckenmiller, or Druckenmiller, the German pronunciation. But he is perhaps Druckenmiller, one of the best hedge fund managers ever. And there's a story in kitco.com, and I'll put the link to it below this video. And I quote from this story. It says, "When perhaps the best hedge fund manager ever puts 30% of his portfolio into one investment, we get very interested here at Hedge Fund Insiders." So basically, this article talks about how Stan Druckenmiller has 30% of the Duquesne Family Office LLC fund in gold, or GLD, which is an ETF for gold. I don't recommend GLD for small investors, but for Druckenmiller and his family fund, that wouldn't be a problem, because he would be able to ask for delivery, because he has $292 million worth of gold in his portfolio as of December 31st, 2015. And the whole fund itself was worth $977 million at the end of last year. So, and he started buying, according to the SEC reports, because the fund is so big that it has to file reports to the SEC. So according to the SEC files, he bought gold in April of 2015, 1st of April, and also on June 30th, 2015. And during that time, the price of gold was around $1,200. So it wasn't looking very good towards the end of last year, his investment. But now it's looking better, because, we're above $1,200. There's a comment here in this article, and it says, "In this case, Druckenmiller tipped his hand when he gave a speech during the second quarter of 2015, where he said the following, and his reason, for buying gold, and I quote, "Our monetary policy is so much more reckless and so much more aggressively pushing the people in this room and everybody else out of the risk curve, that we are doubling down on the same policy that really puts us there." Meaning the 2008 financial crisis, and enable those bad actors to do what they do. Now, no matter what you want to say about them, if we had 5 or 6% interest rates, the housing bubble, would have never happened, because they couldn't have gotten the money to do it. This is crazy stuff we're doing. So I would say you have to be on alert to that ending badly. Is it for sure going to end badly? Question mark. Not necessarily. I don't quite know how we get out of this, but it's possible. And then he continues. No, that's it. That's the end of the quote. And according to, Stan Druckenmiller, his hedge fund, Duquesne Capital Management, from 1986 to 2010, when he closed the fund, it returned 30% a year to investors, and it never had a losing year. So he knows what he's doing. This guy, even though nothing's guaranteed in this world. But I just thought I'd make this short video, Easter Sunday, and just to point out that So one of the arguably best hedge fund managers ever has 30% of his family money, in gold, and that percentage has probably gone up now because the price of gold has gone up a bit. So I don't know what the rest of his portfolio is like, but that's a big chunk, 30% of all his assets in gold. Yeah, have a good rest of the weekend, or here in Europe, I think most countries have a holiday tomorrow as well. I guess in the U.S. everyone's going back to work tomorrow. Take care. We'll talk to you later. Bye.